Welcome back to Your Average Investor, the channel that looks at my journey through investing, budgeting and finance. Now we're set in that weird time of the year between Christmas and New Year, so I thought we'd take the opportunity today to check in on my Trading 212 portfolio during some downtime between Christmas and New Year. We've not looked at my Trading 212 portfolio for between 6 and 8 weeks, and quite a lot has changed, with me now approaching £2,000 invested into the Trading 212 platform. It's been a really interesting month for the stock market, with Tesla, one of my main investments, now being integrated into the S&P 500, and also new local and national lockdowns within the United Kingdom specifically. In addition to this, Joe Biden has emerged victorious from the US presidential campaign, which should provide a little bit more certainty to the American markets. And with regard to Brexit, a new trade deal has been agreed between the United Kingdom and the European Union. This should hopefully help to provide some certainty to FTSE 100 companies going into the future. Without further ado, let's hop onto the Trading 212 platform and have a look where my investments sit at the moment.
Here we are then back inside my Trading 212 account. You'll notice the overall value of my portfolio currently sits at £1,992.31, and that's up from the last video where it sat at £1,249.72. I've now invested a total amount of £1,784.02, with my investment seeing a return to me of £208.29, which equates to around an 11.5%. If we compare that to the last video, my rate of return was negative £150, with it being down negative 10.5%, as this was around the time the second lockdown was announced, so obviously there was lots of uncertainty within the global and the United Kingdom markets. Now, this is just a quick rundown today of my portfolio to update everyone, so we'll jump straight in and have a look at my current investments. Since my last video, I've invested around £30 more into Alphabet, and you can see that I've now got £44.28 invested, seeing a slightly negative rate of return, but nothing to be too concerned about. Equally, I've invested around another £100 in Amazon, increasing the amount of shares I own from 0.02 shares up to 0.06. Amazon's currently returned to me £5.12, or just under 4%, which is particularly good for this year. Amazon's had a really good year. With everything shutting down and lockdown, Amazon really has come to the forefront of retail, with e-commerce now outweighing normal high street shopping. I believe Amazon's income and profit data comes out sometime in early 2021, so I fully expect this to increase in the next few months following the release of that data. I've also increased my position within Apple from 1.5 shares to 2.5 shares. Apple's had a bit of an odd time recently, with its share price decreasing quite substantially after the share split. I used this opportunity to put more money into Apple, as I've said, investing in one more share, and since then it has increased in value. This, coupled with the fact that Apple have released they're working on an electric car project at the moment, termed the Apple Car, really could see Apple go from strength to strength in the future. If Apple get this right, they really could go from strength to strength in the future. They plan to release their first vehicle in 2024, and if this goes well, the sky really is the limit for Apple and where they can go. If we look back at AstraZeneca, you'll be able to see that I haven't invested anything more in them recently, however they have decreased slightly in value, with me being down around 16% at the moment. If we take a look at AT&T over the long term, you'll be able to see that they're on somewhat of a downturn. Now, AT&T are really excellent for dividend investors. If we have a look at their dividend, you'll notice that they offer a dividend of around 7.72% at the moment, which is an excellent yield for any company. This is the main reason I invested in AT&T, as it gives you constant income into your portfolio every 3 months or so. I currently hold 4 shares of AT&T, and I'm currently down at around 8% on my investment. But if we have a look at this in a bit more detail, you'll be able to see that the current loss that I'm receiving is not solely due to the fact AT&T has decreased in value. What Trading 212 do is they split your return into market gain or loss and FX impact. And the FX impact is any impact of the change in currency value when you're investing outside of the United Kingdom if you're based in the United Kingdom. So here you'll be able to see that since I've invested in AT&T, the stock price has lost £1.88 in value. However, the FX impact has seen me lose another £5.46. Now, this isn't anything to do with the market belief in AT&T or the current market value of the company. It's merely to do with the pound versus the US dollar. This could mean that as the US dollar strengthens or the pound weakens, that I will actually see an increase or an inflated rate of return over what I would normally expect to see from just growth in the company. While the figures on screen aren't anything major, it is important to understand the impact of FX on investments, especially if you're planning on investing large quantities of money in the future. Boeing have seen a complete turnaround recently since the vaccine's been released. In my last video I still owned one share of Boeing, but it was valued at £111. If we compare that to now, you can see that the same share in Boeing is now valued at just under £160, with a rate of return of just under 25%. This has a lot to do with coronavirus, and I'm sure that as coronavirus gets more and more under control, with more and more people getting the vaccine, shares in Boeing will increase as global travel starts to increase and go back towards what we could normally expect again. Moving on to BP, I think the less we say about BP the better. They have seen a bit of a rally of late, but they're still doing particularly poorly for me, down around 14%. Coca-Cola up around 8% for me, and EasyJet, another company concerned with air travel, have seen a rally of late, again in line with Boeing, up around 41% for me. I still own a quarter of a share in Facebook, as since the last video, which is up around 32 pence at the moment, or 0.65%. The iShares Global Clean Energy ETF has been another really good investment for me recently. In the last video, I still owned 7 shares in this ETF that it was valued around £60.74. As you can see, those same 7 shares are now valued at £82.53, netting me a rate of return of over 40% in the time I've been invested in this ETF. Now, global clean energy is something which I can see booming in the future. There's lots and lots out there at the moment on global warming and the impact that global warming could have on our way of life in the next 10 to 15 years. Therefore, I'm invested in the iShares Global Clean Energy ETF for 2 reasons. One, because over the next 10 to 15 years, I can see this being an area which has got lots of money put into it because of the importance of moving away from fossil fuels and moving towards more clean energy in the future. And secondly, by investing into this, I'm actually putting money into global clean energy. So hopefully that money will be put to good use to help develop and research new different clean energies to help us as a society move towards a better tomorrow. I've invested a little bit more in Johnson & Johnson, with me around breaking even at the moment at around £82.29. Lloyds Bank have seen a bit of an increase and rally of late, with my same 34 shares now valued at £13.16 rather than £9.50. And I've invested around £15 more into Microsoft, with that currently seeing a rate of return for me of 1.87%. As with the last video, the real elephant in my portfolio is Nikola Corporations, so I'm not going to spend too long talking about them as I did last time. I'm currently down almost 70% with them, with my 1.5 shares currently valued at £15.22. This is a company that I felt really strongly about when they IPO'd earlier in the year. A lot has emerged about Nikola recently, with a lot of the claims that they made being factually incorrect, which is obviously why people have lost faith in the company and the value of Nikola has decreased quite substantially. In all honesty, I'm just going to hold on to Nikola to see what happens in over the long term. I didn't invest any more than I could afford to lose, which is something that you should never do in the world of investing. I think I invested around £50 in total into Nikola. So if it does go down to zero, it's not the end of the world, it'll just be a lesson learned and move on. I've bought another half a share in Realty Income, with my investment now worth £112.43, and the main reason I invest in this is for the monthly dividend which I receive from them. Royal Dutch Shell really has seen a turnaround. In the last video I was down 22.6%, and I'm now up over 7% with them, with my investments totalling £128.92. This again is because of the increase in value of oil and the fact that lockdown was eased during that time. The last 4 shares in my portfolio are Starbucks, which is up around £5, Tattooed Chef, which is doing well at the moment, up around £5.54, Tesla, which has done amazingly this year, with it up around 41% for me since the share split, which equates to £127.70 in return. Trading 2 and 2 sold my fractional Tesla shares during the share split earlier in the year, and I then immediately bought straight back into Tesla, as it's a company that I really strongly believe in, especially with them now being placed on the S&P 500 index. At that point, I was up around £80 in Tesla, and since reinvesting, you can see I'm up around another £127, meaning that this year, Tesla have made me well over £200 in investment return. The final company is Walt Disney, which is up around £10 now for me, which again, I'm really pleased with. One of the things that's been really pleasing to see increase over time is my total dividend income. As you can see, I've now made £8.62 in dividends since initially investing into this product in May. I'll scroll quickly through the dividends so you can see them, and whilst they're not massive amounts of money, you can see that they do all add up to make a fairly decent amount of income throughout the 6 to 7 months that I've been investing through this platform. Now, I'm going to continue to invest in all of these dividend-paying companies, as this really does add nice income to the portfolio which I can then reinvest. I've received a little over £5 in dividends over the last month, and you'll be able to see that when you look at my portfolio. As I said at the beginning of the video, my portfolio is currently valued at £1,992.31. However, you'll be able to see at the top of the screen, the overall value is £1,998.25, and that's because I currently have 3 funds sat in the Trading 212 Invest account. This is money that I'll quickly put to good use when the markets reopen again in the next few days. And there we have it, a quick roundup of my Trading 212 portfolio. Nothing too in-depth today, just a quick stock check of where we're at the moment over the last 2 months or so. Please do like the video if you enjoy content like this, and consider leaving a comment on anything that you would do differently if the portfolio was your own.
So there we have it, my Trading 212 portfolio, sitting at around £2,000 at the moment in value. This is something that I'm really pleased with, as I only opened this portfolio around May sort of time. So it's grown really nicely throughout what's been an otherwise very difficult and challenging year for the global financial markets. I'm going to continue to invest in the Trading 212 platform over the next few months, and I am considering at the end of the tax year and at the beginning of the new tax year in April, moving all of my Vanguard products across to Trading 212. Now I know I've alluded to this on a number of different occasions and several different videos, but I will do a specific video on this and why I'm considering doing this. It'll be a big decision for me because I really do like the Vanguard platform, but moving across to Trading 212 will mean that all of my investments are secured in one place, and it will also mean that all of my investments are within the same ISA wrapper, which means that I won't ever have to pay any tax on my investments. Also on this channel I talk a lot about match betting and different ways to make money. So if you haven't heard of match betting before, please check out one of the videos down below and see if it's something that you could do to make extra money every single month. I've had one of the subscribers who signed up to Profit Accumulator and started match betting message me and so they've made over £2,500 in under 6 months at the moment. So really well done to them, and hopefully it's something that you guys can continue to do as well. And apart from that, I'll catch you guys in the next one.